Hi all, it's Dr. J coming to you live, streaming live from Long Island, New York, where it is officially G-Day +1, sort of a nasty start to a nasty day, follow-up day to the deluge that occurred yesterday when Geron lost 2/3 of its value. And Dr. J feels like he lost 2/3 of his value. Although it wasn't quite that bad, it was close. So that's a little lesson learned. It's never too late to learn a lesson, not to put all your eggs in one basket. I didn't put all my eggs, but I put too many eggs. In any event, it's sort of a very unsettling feeling, but life goes on, investing goes on. And the old motto, turn the next page. So that's exactly what I'm doing. I'm turning the next page. I'm looking at the other eggs I have in my various baskets. So let's take a look at some of them together. Share screen. By the way, the usual housekeeping, do your own due diligence, check with an investment advisor before making any investment decisions. My opinions are my own and do not constitute investment advice. And follow me if you want to at your own risk. Occasionally, I do have some very good ideas. In any event, let's take a look at what we have up on the screen, cytokinetics. Cytokinetics is one of those very quiet, relatively unknown biotechs. It is a small cap. It is trading in slightly overbought territory according to the RSI, but it's had a phenomenal run. It went from 8.1 for just about straight up till now, and went parabolic the last week or two. So it's been a phenomenal little turnaround story from as low of, on 8.1, a low of $6.21 to today's close near $10. So let's see where it actually closed today. It actually closed at 9.85 with a high of $10. So it's looking to take out this high of a little bit more than $10, $10.26, I believe it is. No, that's $10. So it's looking to take out the $10 high and then the $10.26 high set on 124. So it looks very close to making new highs for the year. And then it will no doubt fill this little gap to the 120 area and go from there. I think it's the 120 area. Let's take a look. Where are we here? A low of, the 1085 area. Getting a little confused, which is not atypical considering it's the day after. 1085 was the low set on 11/15/2017. I think that will go. It will fall pretty quickly. I think cytokinetics, for whatever reason, expectations of good data, I suppose, is looking like it's not stopping, at least not yet. So it's got a phenomenal upward trend line with a huge slope that it started to follow. And if it falls back, it's a big deal. It's going to fall back probably and find support on the lower ascending trend line. So it might just take a little bit longer to get there, but it's certainly going in the right direction. So we have a nice support in this upward trend line. We have a new trend line for the last 2 weeks that cytokinetics has been following. And if it continues to follow that, it will make me a little bit happy as opposed to a lot sad the way I felt on Thursday. So cytokinetics is a little gem that very few people know about. It's a little, it's got a unique kind of drug dealing with muscles and applicable to cardiac, I think it's applicable to heart failure, not heart attack, but heart failure. All right, let's look at the next one. OncoSec Medical. OncoSec has got a nice story with some really good data recently on the Merck collaboration, which is labeled Pisces. OncoSec again has a new CEO, relatively new CEO, with a lot of experience coming over from adxs. However, the chart has turned down the last few days. So it looks like it could go down and look for support back at the 133 level. If it does, I believe it's a good buy at that level. It's probably, if it's a good buy at 133, it's probably not a terrible buy at 140. I would be very happy if it got into this trading range, hit around. If it can rally to the 175 area, then I'd be very, very happy with it. I think that's a possibility. Let's go on. But first, right now, it's looking a little weak, like it wants to test its support. CVM is another baby blue chip, so to speak. One that's very low market cap, and one that has finished a huge trial on head and neck cancer, squamous cell head and neck cancer, the largest such trial ever. CVM is awaiting data. There's a lot of optimism here as reflected by the chart. It was a very good sign that it broke above the downward trend line here. So even though it's off 11 pennies today and you have this red candle, it still hit the upper end, the bottom end of this steep ascending trend line. So as long as it hugs that line, it's doing very well. And it's also in a position where even if it pulls back, what is it pulling back to? It looks like it's pulling back to another ascending trend line with less slope. The danger is that it could start to follow this trend line, and which would take us down. But I don't think that's apt to happen. We've had a phenomenal run. Maybe we pull back a little to, let's say, going forward, the $3.94 range. I don't see much of a pullback in the cards, but we'll see. So CVM is one that I am following, even though I'm no longer in it, because I really think it's an interesting story. athx. athx is now my largest biotech holding, considering what happened to Geron. And it does look good, but it's having trouble freeing itself of the 210 support line. You want to get some space, a little space between the candles and that 210 level. It's less 3 days. It's come back down to hit that 210 level. So I'd rather see it break away and stay away for a couple of days before going into it, because I think there's plenty of time. I think once it gets free of that 210 level, we're going to take out the 309 high of the year. Maybe not immediately, but by end of year. So I think the bullish case can be made for athx sooner than the bearish case, just from the chart. But also, fundamentally, Again, there's a Japanese company called Helios KK that athx is partnering up on for an ischemic stroke trial of its multi-stem drug. Multi-stem, of course, is a stem cell product off the shelf so that it can be used for any patient. And the window is greater than the window for the standard of care. So all in all, athx is one that we like and would be a buyer here as soon as it breaks that 210 level. Also, fundamentally, it expects further expansion of its agreement with Helios KK to include China, maybe to include Europe. So let's see, maybe other indications. Let's take a look at Apple. Apple is no baby blue chip. It is a blue chip. It's been one of the best performing stocks of the last 30 years and continues to be. Look at that chart. It's currently trading between its upper trend line and its lower trend line, both of which have positive slope. So no matter what, you're going up. Even if you come back a little, you're going up. It's a very strong stock. I think it takes out it should definitely take out the high of the year up around 230 and go past that. I think some of the analysts are calling for 250. I think that's easily accomplished by end of year with good data on its new iPhone products, which I think it will have. And they've also improved their iPhone watch tremendously for medical applications. I'm even thinking of buying one because I think I've got every medical application. I'm trying to be funny. All right, Geron. Oh, it's painful. Maybe we'll skip this one. All right, here it is. Got to go down a ways. I drew two trend lines, one going way back, showing support at around $1.80, $1.75, something like that. And an upper trend line at about 308, $3, something like that. I see it trading in this little triangular area. The volume should dry up next week. We've had 80 million, 45 million today. So as things get to normal, I think so will the price share normalize and stabilize, probably somewhere around that 180 to 195 area, and then hopefully break out of this triangle in a positive fashion, heading back to that 308 level by end of year. So I think it'll be a slow ascent to get back to the $3 area, which is where Geron really took off from. I think it was 303 or 313. We could take a look when it started to rally just a few months ago. 720 was a low of 313. I think we get back to that by end of year. There's lots of optimism with the MDS trial that's going to happen in 19, probably second half of 19. And that looks good. And then there will be revised endpoints to start a MF trial. I'm sure Geron is going to look for a partner on that. They said, Scarlett said ex-US, but I wouldn't be shocked if we picked up a partner for the US, or at least someone to collaborate, or a collaboration of some kind. Okay, so Geron is down but not out. That was a little vlog that I did yesterday, which seems like an eternity ago. But if you haven't seen that vlog, go tune it in. Down but not out for Geron. Actinium Pharmaceuticals. One of my baby blue chips. It's had a phenomenal run. It has a steep upward channel. So the chart is really nice. It took out its yearly high just 3 days ago, but has regressed to test its lower trend line of the channel, lower channel line, which is okay. It needs to catch its breath before continuing on up. I think it's a good buy here. I think we will take out the high we made 3 days ago. I think we will get some good news on data involving its A and B drugs. B is in phase 3, A is in phase 2. I think A is coming out with data first. Good data will propel this to new highs above 85 cents. And once it breaks that trend line, there's very, very little in the way of a resistance to stop it from going all the way up to, let's say, 130. So I'm going to make a bold call here, 130 by end of year. Things just go a little bit right for actinium pharmaceuticals. Adxs. Adxs had its big hit, down from 120, actually down from $30 a share, but more recently down from about 120 to the 90-cent level or 80-cent level. Let's see where it made its low. Made its low at about 78 pennies, and now it's on. It seems to be on the way back. Dr. J has been averaging in. I like this. I like this company based on the fundamentals, and a cheap immunotherapy company with about 5 irons in the fire. That's not bad for a small market cap immunotherapy company whose listeria-based product seems to be somewhat effective, at least in the trials, early trials. The problem, of course, was it was the clinical hold. Apparently, I think it had to do with a listeria bacterium that might have infected someone, I think. I haven't been following the company for a long time, but I know the clinical hold was removed in July, and there was an offering for shares at $1.20 to raise money. And of course, it had a dilutive effect, so the stock traded down. And now I think it's gathering momentum, at least stabilizing. So I know we hate to chase that falling knife, but Dr. J has been doing just that, figuring average in a little bit at a time, and hopefully I don't get hurt too badly by missing the bottom. So 77.5 pennies is not the bottom. I'm willing to risk continuing to buy. Dangerous game, but I'm willing to risk that. Okay, so we've gone over 8 different stocks, including very low market cap stocks and a very high one, Apple. So I'm going to be concentrating on biotech, and I'm going to concentrate also on the FANG stocks, starting with Apple, but branching out to Amazon, Netflix, Google, and Facebook, of course. Okay, so today the indices were all flat. I think the Dow was up a small fraction, and the S&P and NASDAQ, were basically unchanged. All 3 were basically unchanged. So today was a Friday not worth mentioning in terms of the major averages. Lots of action in the trenches. So this is Dr. J bidding you farewell, sayonara, shalom. Hope you had a better trading day today than you did yesterday. Hope you'll have better trading days on Monday. Hope you'll have a better trading week for the week ahead, for the months ahead, for the years ahead. All of you should make your millions quickly. This is Dr. J bidding you farewell from Long Island, New York.